Pleased to be invited back for the second of these three sessions. I already spoke a bit about myself last week, so I won't dwell too much on this to say that my background is in valuation surveying with most of my professional work experience in Central and Eastern Europe. And for the last 10 years, I've been with the University of the Built Environment, which is the leading provider of supported online education in the built environment. And we have something like 106 years of history so far. All our courses are accredited by relevant bodies, including several by the RICS for various APC pathways. And I'm going to talk again today about the APC process from my own perspective, based on my experience. And to that end, last week we had some questions and I couldn't answer them all. But that's okay because we're joined by a real APC expert today. So can I ask Ralph to introduce yourself and APC answers, please?
Thanks, David. Yeah, my name's Ralph Charlwood. I'm a chartered surveyor. I started at JLL on the graduate scheme, spent about 10 years between there and Regis, and then I transferred over into lending, working for an American bank, and then finally we set up our own asset management business, which we sold and at a point where we had 3.5 billion assets under management from a standing start. I also assess, chair, audit, and sit on the appeals panel for the APC process. And I do the valuation, commercial real estate, property finance investment, and corporate real estate pathways. I have assessed in the past planning and development management and some others, but those are the four that I mainly do now. So hopefully between me and David, we should be able to answer anything.
Yeah, thank you. Well, see, I mostly only do valuation pathways, but I have assessed on planning and development, but it's a little bit outside of my comfort zone. Especially, I learnt with a very different planning regime when I was at university in Scotland than in England, and most of my work experience, again, and practical experience, as I said, was abroad, again with very, very different planning regimes. So this session, I'm going to talk about the main traditional routes leading to the APC. We're not talking about the specialist routes or how to join as an associate or how to become a fellow. But I say Ralph can take questions on these, I'm sure. You'll recognise this slide from last week. I've only just got this up so we can have a quick minute for a recap explaining what a competency is. And that, I think I said last week, it was quite a convenient word that describes an expertise or a skill that you have to demonstrate your ability into a specified level. And I mentioned that there is this full list of requirements and competencies guides this document last week, but we didn't really drill into it. So today we're going to look inside it a little bit as well. And we didn't look at an actual pathway specifically, but we will today, just very, very shortly. And just a recap on what pathways are. I think I described them as representing a particular field of work or a sector of the built environment, and each one contains a basket of competencies or a shopping list of competencies that you have to achieve in order to qualify through that pathway. And that guide tells you which ones are not only which ones are required, but to what level you need to achieve them at. If you remember last week, we talked about the 3 levels, starting off from knowledge and leading up to giving reasoned advice at level 3. And you can see here we've highlighted the focus of this session: property finance and investment. And I'll stress that those of you who are here who are thinking of a different pathway or considering a different pathway should still find this session useful. Because a lot of what we're going to talk about also applies here. The logic is applicable to all pathways. And here you can see the requirements. Actually, I had to fit this over 2 slides, the competencies that you have to achieve. It didn't quite fit on to the presentation. So we've got the mandatory competencies that are common to all pathways. We've got the core competencies, those technical competencies that are expected for your particular pathway. and they also give a series of options that you have to achieve, so you have some flexibility. Um, Ralph, I'll start by saying I've never sat on an assessment panel with candidates on this pathway. I think, as I said, I've only ever done valuation, maybe commercial property as well, and one time planning and development. So, what sort of candidates do you see that apply for the APC on this pathway?
Okay, thank you. Just to sort of go back a stage, just very briefly, when you're working, and unless you've had previous work experience, the chances are you've got to do 2 years, 24 months of experience. And what I would say to candidates is that the experience is the experience, but you will get sometimes people that have a choice. They can either do commercial real estate or they sort of could do property finance and investment. What is relevant is that at the end of the day, if you're successful, you still just end up with MRICS. You don't get MRICS finance and investment after your name. And there are plenty of people who work in property companies, funds, banks, etc., who came through the commercial real estate route or the valuation route, and then have transferred across later, building on certain skill sets. So it's not necessarily a thing you have to have done. But answering the question that you just asked, who do we see? We often see, as I said, people that work for the big funds, people that work for property companies or asset managers. And one of the key things is that a lot of people can't get valuation to level 2 or level 3 because they don't work, for example, at a JLL or a Knight Frank or a Savills on rotation. Indeed, if you work in capital markets teams at JLL, you will probably go through the property finance and investment pathway now. And one of the reasons for that is it means that the capital markets team don't need to have to beg to get their candidates rotated through valuation. However, on that right-hand side, those purple competencies, you will be expected to have given advice on at least 3 of those top ones. So financial modelling, inspection, investment management, property finance and funding. So that means that most candidates get inspection, irrespective of what they're doing, or should be getting out on site. But the others, it does mean that you will be running cash flows, you will be giving advice at a portfolio level, and you may well be looking at funding structures. So that would preclude, for example, most of your average surveying consultancy candidates. So as I said, propcos, funds, anyone who's dealing with modelling funds and the finance and funding aspect of it.
Yeah, thank you. I'll actually be. It's good you've mentioned that sort of level 3 requirements because I was going to ask you about them in a second. But two questions come from that. First of all, two questions come from what you from to my mind. Is this more about a catch-all pathway, or I mean, is it a catch-all pathway for a wide range of sectors that weren't fitting in to other pathways?
Yes,
Or yes,
yeah,
okay,
definitely.
good.
They found there were people in big real estate, commercial real estate organisations that just couldn't do the commercial real estate route. And just like when they introduced, for example, loan security valuation, so that is doing a valuation for a lender, they added it in to reflect a number of candidates who were doing it and giving
Mm.
special advice on those that wasn't reflected in the current pathways. And as you saw, and I think we're coming on to, they are actually increasing the number of pathways, not necessarily relevant to this group or this topic today, but they keep refining it and saying, are there new areas of the business that we need to be allowing people to qualify through?
Yeah, no, I'm going to ask you that at the end of this
Yeah.
time as well. The other thing that came to my mind is for those who are listening in today, those candidates or potential candidates who maybe want to become a registered valuer under the valuation registration scheme, they will still need to get valuation to level 3. Is that correct? So although you said that final qualification is MRICS, it doesn't matter what pathway. Is that an exception?
Uh, Sorry, I'm not trying to think. Are you saying could you be a registered valuer on this pathway?
Yes, yeah,
Yeah, you
because
mean you
I
could
mean,
take valuation
without
to level
having,
3.
yeah,
The issue for me would be to get to valuation level 3, where you are actually giving valuation advice, um, are you in the kind of role, or have you over those 24 months been in the kind of role where you will also have been doing financial modelling or investment management or finance and funding? Typically, it's hard to get valuation to level 3 if you are not at one of the big consultancies.
Right. Okay. Okay. Thanks.
Most of the time, you do see some people do this pathway through the big consultancies like JLL, but a lot of them are not. They are client side. And once you are client side, so an investor or an asset manager, it's going to be hard to get valuation to level 3, because we are, for level 3 valuation, expecting people to do red book valuations.
Yeah. Okay. Okay. That's a good answer. Thanks. Back then to the topic at hand. Um, to my mind, when I'm thinking about the careers that surveyors have, and I might be quite in my own valuation world. We've got these technical core competencies. One of them is investment management, including fund and portfolio management. And the other one is property finance and funding. And to my mind, these are two different jobs. One is banking side perhaps, and one is client or consultancy side.
Mm.
So about looking at this, my thoughts were it's going to be quite difficult to achieve both those competencies.
Yes,
So any comments on that?
yes. Where I see, I would, if I were giving personal advice to any of the candidates, I would say, don't do this just because you like the sound of it. Don't
Yeah.
just go, oh, I like the idea of doing finance and investment, a pathway. Say to yourself, what experience am I going to get? Because we, strangely, financial modelling, and especially if you've been on one of the Bayfield courses, is actually a fairly straightforward one to pass. We refer people, we don't use the word fail, but we refer, i.e., you've got to resit, often because they have not done finance and funding actually to level 3. Because typically, your average age, modal average of a candidate is going to be about 25. Typically, they may have done a first degree, they may have done a master's, 2 years of work experience. They are highly unlikely to have been giving lending advice or borrowing advice. Um, so it's actually quite hard to get finance and funding to level 3. Um, Equally, investment management, as I was, it's a bit like the helicopter. We want to rise above any individual asset, so we're giving more strategic, overarching advice. It can be done, but again, we often see candidates, and what they're really giving us is a fairly basic asset management example.
So from the particular property.
Yeah, rather than
Repositioning, reletting,
yeah, yeah,
refurbishment.
yeah,
Yeah.
a
Okay.
re-gear or change of use or something. Um, and they haven't quite justified or demonstrated to the panel that it's at a kind of portfolio level or fund
Which
level.
could which might be tens of properties rather
Yeah,
than just the individual.
yeah.
Yeah. Okay.
I,
I
I
don't.
mean, it does have, in my experience, and the RSS are not great at sharing the data, but in my experience, it does have a lower, slightly lower pass rate,
Right. Okay. Okay.
this pathway, because of
I
what I
mean,
said.
people talk about pass rates, and people. I know people will say that building surveying is the hardest, but if our ICS aren't sharing the data, then this is all anecdotal. I don't think candidates should be worried about it, and they shouldn't be put off by pursuing an APC using this pathway if it has a lower pass rate.
Yeah,
It's just they have to be sure about the structured training. Last week I had a slide explaining how the structured training works, so I didn't include it this week because we had time to go into that detail. But yeah, they shouldn't be put off by this. It'll depend on their work experience.
yeah,
Um, I was also thinking that this property finance and investment seemed like two different pathways that have been bundled together and maybe into sort of a more unsuccessful marriage of two different pathways that could flourish on their own. That's maybe a leading question itself, uh,
yeah.
but you're
No, I
nodding
mean,
your head.
some candidates struggle because they're not really getting the experience I mean, I usually give advice to say most candidates shouldn't take property finance and funding to level three because most of them hasn't actually done it. But what that does
Mhm.
mean is that they are going to have demonstrated investment management to level three, and some struggle. And one of the
So,
big
so
things
the,
that we did discuss this. We do see some candidates who are sitting this pathway, and I don't mean to belittle this, but all they do is financial modelling. They are sat running cash flows, running scenarios, doing sensitivity, and it's kind of all they do. And it is very hard to pass if that's
yeah.
what your job is.
Yeah, I mean, I was thinking then, what was on that summer, or what you just said. I passed my APC when I was 26, and it was 20 years and 2 weeks and 2 days ago exactly when was according to my certificate. Um, but would this route therefore be more commonly taken by the senior professionals or those who are going through, the 5 year experience or the 10 year experience route rather than the traditional degree, 2 years structured training APC?
Uh, I don't know about the
And
percentage split, but yes, I certainly have seen some more senior, very experienced property professionals who, at some point later on, have decided they do want the kind of the MRICS. Um, we found, I mean, we had a number of chartered surveyors in our fund, but it is useful when doing capital raising globally. It's a badge of honour. Um, I think the main issue is it was trying to expand it to all those people that are working at Aberdeen or Aviva or the Crown Estate or Grosvenor who aren't client side, aren't doing valuation, so they can't get vals to level two, which they would need to for the commercial real estate, but perhaps they are doing modelling and finance and investment management. So it was, as you say, it was sweeping up some very, very good, talented property people that didn't have a route to entry to the profession.
yeah, so okay, okay. And I saw you mentioned some things being more like some of the candidates presenting work that's closer to asset management, and asset management isn't one of the competencies here, and maybe it should be. It should be part of it, or even in this core competency, and then there would be a defined difference, and candidates would know to do different types of work.
Yeah, I mean, I've certainly helped some candidates kind of rewrite their presentation because typically the asset management, if, for example, you have re-geared a lease, so you've got a short unexpired term, you've spoken to the tenant and you've extended it, you've extended the weighted average unexpired lease term, which
Yeah,
may well be a fund metric,
you've
but
added
in this
value.
case,
Yeah,
yeah. So you just often have to just explain to the panel, you have to demonstrate why it was an investment management thing. A lot of the moment, at the moment, a lot of the funds have sustainability targets. So upgrading the portfolio in terms of their energy performance certificates is a fund level requirement. And then you can give an example of some work you did that met the fund requirement. So sometimes it's actually how it's presented.
yeah. Okay, thank you. On that sort of same topic, looking at some of the technical competencies, I haven't shown valuation to level one here. I had a question for you, coming from similar to what you said about the amount of candidates or the amount of built environment professionals who only do financial modelling. I mean, how do you test that in the interview, financial modelling? It's impossible to show a modelling test in an oral discussion.
Yeah,
Uh,
we assume that the candidates are Excel literate or if they're using proprietary software. So often we will ask, and this is stuff that I know is covered by Bayfield because I see it in a lot of candidates, what makes a good model? You know, what are some of the things that we look for? When we're talking about creating different sheets, locking cells, color coding, we don't generally get into functions. We're
You
not
don't
going
you
to
don't ask them to explain a formula. Like, no,
no,
okay.
no. What I want to know and a code to live by in life is that the map is not the territory. The model is not
Mhm.
reality. The only time a model is reality is if you're looking back over a project to see what it actually did.
Mhm.
Anything that is a forecast is a series of guesses, assumptions, and you may well be testing sensitivities to say, how much are we bothered by the rent or the
Mhm.
void period or the capex or whatever. So what I'm certainly for level three, I'd say, right, on this particular cash flow, talk me through what was your advice to the client. And they might say, well, once I modelled it, it's a big portfolio. We realised that there was a bit of a dip, a potential dip in year three, where we might actually breach the lending covenants.
Okay.
So my
Oh, yeah.
advice was that we either do this or we do this. I want to hear that you've said, what you've told the client based on that detailed modelling work you've done. Um, so that's how I test it. What makes a good model? What advice did you give? And that might also include, what further research did you want to do?
Yeah.
There might be a
Yeah.
recommendation that said, let's go chat to some of these tenants. Let's go talk
Yeah.
to the lender about how we if we can change those covenants. Um,
Yeah, no, that's real management of risk there that goes beyond just sensitivity and spreadsheet analysis. And I mean, talk about spreadsheets. Do you ever see candidates submit Excel spreadsheets as part of their case study? What I
yes,
would call a critical analysis, but it's now called a
yes,
case study.
yes.
Yeah.
And as a panel, we will look at it, and
Okay.
we will, because I think it's not always obvious when you are young and starting your career, but when you've actually been at it a while, you can start to look at things and go, that doesn't make sense. Or you look at it and go, why? A classic might be, why have you put in above average rental growth, but actually you've got above average void periods? So what's going on in this sub market where it's the rents are going up, but you're taking longer to let the space? Because typically I would expect, and this is the scenario type stuff, where you'd say if it's actually a really good market, I might be sticking with average void
Yeah.
periods, or perhaps even slightly below. And other things like, why have you assumed that this is a full industrial estate in an undersupplied market? Why did you assume that every single tenant breaks? Explain to me why you did that. What was your advice to the client? Because when we were doing this, we'd be thinking undersupplied, rack rented, i.e., at market rent. We're going to probably keep at least 75% of them. So even if one wants to leave, someone else might want to expand. But I want to hear the logic. What I don't want to see or hear is, I just shoved a load of numbers in, hit go, that's the answer, because that is not the answer. That's your first attempt. Um, and we've got to look at what might happen. So that's what we're exploring there, a sense of, do you understand the modelling process, both in terms of getting the outputs right or choosing outputs. One of the questions on this pathway is definitely why do we need an equity or money multiple and an IRR, and what's the difference, for example, between running IRRs and running NPVs, and how do we reflect risk,
Yeah.
and things like that, as a really understanding, not only identifying and verifying inputs, but also being able to explain what those outputs are telling us.
See, what you're saying there, when I did what was critical analysis, and I mentioned this last week, I was told to keep it simple and boring and don't try to impress. This 20 years ago, don't try to
Yeah,
impress the panel by doing something complicated.
yeah,
And from what you're saying there, if a candidate was submitting an Excel they'd be leaving themselves open to so many questions and pitfalls and traps from the um, from the APC panel. However, I know fine well the APC panel want them to pass.
yeah.
They're not. There's no trick questions. Am I wrong, or which
Yeah, no,
side?
I mean, choice of case study,
Yeah,
which is your big project, you've got 10 minutes to present it and then 10 minutes of questioning on it, is does need a bit of help and a bit of input. I wouldn't normally, you don't see that many that are pure modelling ones. What you might find is, for example, an acquisition. And as part of that acquisition, there was some modelling it, and there might have been raising some finance on it. So it will be part of it. But equally, yes, the idea of not overcomplicating it or putting out anything that's too complicated is good. I mean, a lot of on the valuation pathway, a lot of people do evaluation, and their key issues are method of valuation, choice of
Hmm.
market rent, choice of yields.
That was my case when
Yeah,
I did it.
yeah. No,
Okay.
it's not like a degree where you can get like a first or of 2-1 or a 2-2. It's pass or refer. So there's no merit really in making it more complicated than it needs to be.
Yes. If I, as we should be rooted in economics, and being as efficient as possible means just enough to pass and not get a high grade, because there's no high grade. And it's interesting you say refer. It's different from a fail. It just means go back and do it again, try
Yeah.
again. It's not a. Well, we're coming to the end, and I wanted to. I had this slide up from last week about new pathways, but you've already mentioned about our ICS pathways, how things have been changing. Do you know anything? Any advice? Do you have any insider knowledge about these new trial pathways that are? No,
Yeah.
okay.
I mean, they came
Do you
up a couple
get
of weeks ago.
give
Sustainability
it?
is big, and what we know
Yeah,
at the moment is that it's only really a small part of the commercial. Um, I mean, sustainability is to commercial in a way similar to what property finance was to commercial, in that there's a load of people working in this area in the built environment, and so RICS have said, do we need a separate route of chartered surveyor that is a
no.
sustainability expert?
So yeah, yesterday I was at the World Built Environment Forum in the RICS Built Environment Forum Europe in Budapest, and maybe half the speakers or those on panels or those on the fireside chat sessions were ESG experts or sustainability experts. But I don't think any of them was a member of an RICS of the
Yeah,
RICS. So maybe, well, first of all, you don't need an MRICS to get to that sort of job, to get that sort of role. But similarly, by having this pathway, maybe it will attract, similar to property finance and investment, some good people into the profession. Maybe that's the thought. And just I wondered, with the some 450 panels that you've done, maybe you have some extra channel with the RICS to give your opinion on how these pathways are working or how they're not working. But no, okay,
but
fine.
they're just it's at a that they have not been introduced yet. They are pathfinding to see what it might look like, and I think they're looking for sponsors. So they're looking for
Yeah,
perhaps the big consultancies now have big sustainability teams, and they probably need
yeah.
some leaders to come along and say this
Yeah, the
might
trial
look
is
like.
starting this. It's supposed to start this month for
Yeah,
sustainability advisory. I think next
yeah,
year for
yeah,
data analytics and intelligence. But again, I can see there being, like, for data analytics and intelligence, some of the same issues that you've mentioned with this property finance and investment pathways. Are they giving level 3 advice and doing it in a variety of competencies, or are they stuck in one? I mean, how often will they be doing inspection if you're on data analytics and intelligence,
yeah.
for example?
I mean, it strikes me that,
Yeah,
that this probably sustainability might look a bit like planning and development, where, as you and I have both done it, you've got the topic master planning. That is different from development management or whatever. And they're going to have to break down sustainability into, is retrofitting going to be different from design and specification?
yeah, yeah,
And it will be very detailed.
yeah. I'll come to the end. I just want to know, Ralph, have you got any other final pieces of advice for
Um,
candidates? Anything you haven't
yeah, I
said
mean, just
already?
having moved across from working at a consultancy in their regions into banking and finance, um, the roles are heavily competed for. Um, a number of the employers will be, they can be very well paid, but in terms of work-life balance, not always. These are not
Yeah,
necessarily 9 to 5 jobs. You are working to the transaction. Um, there will be flexibility in our office. Back then, yes, you sometimes did, late nights, and I mean going past midnight type stuff. But equally, there was once you finished a deal, no one cared if you didn't come in the next day. It was,
Yeah. Okay.
but it wasn't. It was quite brutal. The other thing, because they're competed for, when we were hiring and when we were looking for, analysts, whatever, we were looking at high grades. We were looking at people that can do detail. We did want some broader economics. We wanted them to understand how things tick. This wasn't just about being great at Excel. We wanted them to, and kind of curiosity, that sense of just trying to really understand why an asset, why do I want to buy it? Why do I want to sell it? How much risk have I got if I lend against it? It is also, and it can be quite cyclical. If you go into property management, that building will still be there year after year. You will be looking after it. These markets can and do have more of a roller coaster. So it's not for everyone. The other thing, and I would say that in interviews, there's three things that we're looking for. We're looking for, can they do it? Will they do it? And do I want to do it with them? Which is competence, motivation, and personality. Personality here, if you're working to a deadline, if you're sat next to somebody running the numbers, writing the investment paper at 1 a.m., it works for people that can get on with people. So that's just one thing. It's are you good under pressure? Are you amenable? Because it's not for everyone.
Quick question in regards to experienced valuers who want to get MRICS, who are currently ASOC RICS.
I'm assuming that what we're talking about there is wanting to be a registered valuer. So you're going to have to do the valuation pathway or the commercial real estate pathway and take valuation to level 3, which means, and what we're talking about there was we're talking about giving advice. Which is in we're not as interested in the where the property is or what it's made from, or it might be what it's made from. So if you're giving advice to a bank and the property doesn't have the right EPCs, and you're saying we need that as a condition subsequent that these EPCs certificates are in place. But it's evaluation is a piece of advice. It's not just a number. The narrative is just as important as the number. So you will need to be doing that. Generally, I see valuers that it's one of the better roles of ticking a lot of the competencies. You do inspection, you do that, you will have a bit of data management, etc. But it's really about, are you being trusted to give valuation advice?
Sorry, do they have to do like a 2-year training program as well, or is it they assume they've already done the 1 year structured to become ASOC RICS as a
They
minimum?
may well, if a candidate has been working for 5 years, they might be able to come in on the 1 year. If they've got an exempt, there's all the requirements in the RICS documents, but if they have been working and can demonstrate that, they might be able to do it in 1 year, or they might be able to come through the professional experience route, like on a preliminary. Depends very much on the candidate.
I had a look at this in the past for a student, and because I ran a program at what was the College of Estate Management, now University of the Built Environment, that led into ASOC RICS. It was a foundation program, and I found that the RICS advice on being able to move from ASOC RICS to MRICS was lacking or confusing. So this is a similar question, and I think. Maybe need to feed back to have an extra route in for ASOC to M, or make it a bit clearer, because I couldn't see the information as clearly, or not in a way that I would have assumed would have recognised the ASOC experience already.
Yeah.